The bullish party continues on Wall Street with only one of the last 22 weeks actually closing lower. These bulls are strong, they are loud, and frankly, they're in full control. So the only weakness we had in the last 22 weeks is right here. Is this time going to be different, or are we going to see more continued strength? Jerome Powell did speak on Friday, and the story looks pretty promising. So we're going to go through and talk about exactly what he said. I'm also going to walk you through my key notes, including exactly what I'm looking for this week. I'm going to go through all these, so don't worry. We'll circle back and talk about them. We have the key dates for the week, and we also got some SPY levels. But the first thing I want to do, which is going to help support my story here, is actually watch a clip by Jeremy Siegel, who is the Wharton School of Business professor. Let's watch that now. It'll be about 1 minute.
So we due a little bit of a pullback?
Well, I wouldn't be surprised, although I still think the momentum is there, Will. I still think this bull move is strong and has a ways to go. Yeah, I mean, you could have little corrections under the way, kind of head fakes, but I think the news is strong. I think the inflation is going to be being reduced. I saw a GDP estimate by the Atlantic Fed just came out after the durable goods at 2.1%, exactly the target of the Fed this year. So the economy is not showing signs of weakness. And surprisingly, 12-month earnings forward, instead of usually they go down as the year goes on, because they're often overestimistic, are actually rising in many circumstances. So I still think, yes, we could have a 2, even a 5% reaction, but I don't think this bull market is over.
Well, let's talk.
Really interesting. This bull market's not over. So let's pick the story up, because I think it's going to get very interesting this week. So we're going to come back to that probably later this week. But what he mentioned is that a 2 to 5% drop is what he would be looking for. So this week, we want to be receptive to a 1% drop, which would mean a weekly lower low. A 4% drop would be a monthly lower low. And it would take an 8% correction or drop for us to go back down to our previous all-time high at roughly 480s. So if he's correct, fantastic. The bull market continues. We see more strength. We go higher. And we know exactly what levels to pay attention to this week. So like I mentioned, we will come back to the notes in a minute. But what I want to do is pick up on the rest of the story that he was talking about, because it's really a story of continued strength, which means that what Jerome Powell had to say on Friday really mattered. And he said that his inflation view stays unchanged despite the recent data. I'm going to ask you for a huge favor before we go further. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly, greatly appreciate that. So what a lot of this comes down to is that the Fed is basically declaring victory, as I showed you on the first slides, and they don't see a recession, which basically means soft landing, because if recession's not going to come in the next couple of years, there is no recession. That's it. We're over. We survived. And the bullish stocks narrative seen as intact after U.S. inflation data. The data that came in on Friday was core PCE at 2.5 and headline PCE at 2.5. Hey, previous numbers are revised higher, but Jerome Powell did not seem phased. And the interesting part about this is that I think what a lot of people have been talking about is higher for longer, meaning higher interest rates for longer. But it's really stronger for longer. As Jeremy Siegel just said, right? The U.S. economy is exceptional. It is the best in the world. So the bullish stock narrative seen intact after U.S. inflation data. Inflation view won't shift. There you go. Mismatch between spending and income is worrying. Whatever. We're always worried about something. But this rosy story is not the same around the world. The Bank of Canada deputy governor, or the number 2, says the country is facing a productivity emergency. Why? Well, my country sucks lately, so I'm not going to get into the details of that. But this is really important because we've been talking about NVDA being the leader of the global rally, notably in the U.S. And this week, we're seeing our first warning sign. The hollow pattern is broken, which means that if we now get a weekly lower low, that would be another warning. It's not going to take very much. If we go below 891 this week, that's going to be a weekly lower low. And by closing at or near the low of the week, the odds are just higher. So what's going to happen? We want to be very mindful of that. We also have Jerome Powell speaking again on Wednesday. And this is going to be at an event. I did have it up, but Can't remember what it is. He's going to be giving an economic address. So I think I actually have that typed up here. Here we go. So Jerome Powell is going to be giving an economic outlook at the Stanford Business Government and Society Forum. So he's going to talk about monetary policy, but this week he pretty much already told us what he thinks. And we also note that the 10-year note has been going down, even though it's green on the week here. We note the head and shoulders, and we do want to see continuation lower for us to get that momentum for the stocks to go up. And that's pretty much it for the slides this week. I did release a longer video yesterday, which is a monthly summary. Really encourage you to watch that, and I'll leave it for you at the end of the video. So we talked about what the U.S. is going to do in terms of the inflation data. We talked about that. It seems like they're setting up for a rate cut. It's going to be a matter of how many. And as we talked about, we went through that in yesterday's video. We've been overbought since December. Down or sideways with time can burn off these overbought conditions. So if we start going sideways and don't lose these key levels, hey, that just means the market's strong. We're seeing continued strength. So lower lows with an S means that that's the only way we're going to get a reversal. S&P has 21 of 22 winning weeks in a row ever since October. The bears better show up. Otherwise, these bulls are going to keep punching us higher. We keep getting more charts going into blue sky breakouts, as we did also review yesterday. The warning sign for the S&P, which we'll touch on later this week, if it continues, is going to be those 4 full candles in a row or closing lower in 4 consecutive sessions. The first warning would be a weekly lower low below 541. Oh, no, sorry. That's wrong. I should probably delete that. A 1% drop would print a weekly lower low below 517. A 4% drop would be a monthly lower low at 504, and an 8% drop would take us back down to the all-time high. That's basically a correction. 10% is a correction. So if we get a baby cut, right, a flesh wound of 1 to 3 to 4%, that's fine. We just go back down to a monthly lower low, which we did talk about yesterday as well. The dollar is giving us a bit of a warning. It's closed 3 consecutive weeks over the 50 MA, which means that this thing looks strong. I'm not going to lie. It's over the downtrend. It's if it back tests and move higher, so far this year, the dollar's been going up with stocks, but that is usually not going to continue. We also talked about the 10-year note getting a rejection, and we talked about NVIDIA having a full candle. So do we get a lower low? Is it going to hold? Are Apple and Tesla able to overcome their oversold conditions now that the quarter is closed out? And can they go higher? If not, we will need to see more strength from names like RSP, because equal weight means that we're seeing rotation and not net selling. Rotation is really important because people are not cashing their chips out and actually going out. It means that they're rotating. And again, more details are on the video from yesterday. The most important data point for the week is going to be on Wednesday when Jerome Powell speaks. And then number 2 is going to be on Friday here. Forgot to note that. When we get payroll, unemployment, and average hourly earnings. The average hourly earnings could be a bit of a concern, but we'll touch on those a little bit later this week. Did I have the article here? Here we go. So if average hourly earnings increase to 0.3%, that could cause a little bit of pause for the Fed and for other people looking for those rate cuts to happen right away. All right, that's it for today's video. So if you want to see the weekend deep dive from yesterday, that's now here on the left-hand side, which means the monthly review. If not, I'll see you at 9:15 Eastern tomorrow. Thank you very much.